That leads us to our ultimate question then. Who should be selling their Nvidia stock and how should they go about doing it? Welcome back to Chipstock Investor, everyone. We want to remind you, if you have not checked out our latest video on wafer fab and packaging equipment, make sure you check that out. And the manual is available, of course, on our Ko-fi page for purchase, or if you're a member of our channel here on YouTube or over on Ko-fi, you get that manual as well as all of our other manuals included in your monthly membership. However, today we're going to be talking about Nvidia and whether or not it's time to sell your Nvidia stock.
That's right. This has become a big, seemingly fundamental question, and for good reason. Nobody wants to lose their gains, especially after a massive run like this one. Just year to date, Nvidia stock up something like 80% in 2024. It's been an epic run. And if you've been with us since October 2022, when we started this channel, it's obviously been an even better run in Nvidia stock.
I think we'll start this off by saying that we are not selling our Nvidia stock at this time. If and when we do, we'll disclose that ahead of time, and it would be simply to rebalance our portfolio after this incredible run.
But to get a good understanding of when, why, and who should be selling NVIDIA stock, it's important to kind of zoom out. So usually in this channel, we're talking about the technology itself, business models, financials of these business models. So let's zoom out and talk a little bit about the bigger picture, first of all, to get an idea of the when. And then we'll talk about zooming out again to help you think about if you're in that category of the who should be selling NVIDIA stock. I'll give you some ideas to work with here. So let's talk about NVIDIA in the context of the whole semiconductor and IT industry overall. So this is our semiconductor industry flow. Of course, NVIDIA famous as an AI stock. What do they actually do? Well, they have a bunch of patents on semiconductor designs. They design semiconductors. That's kind of where they have traditionally fallen into this industry. They're in the top right. But as many of you probably now know, they have been branching out into actual systems, entire data center systems, accelerated computing or AI, as well as the enterprise software itself that runs on top of those AI servers for data centers. A few years ago, it was super exciting to be invested in NVIDIA because they had this booming data center segment that was approaching $4 billion in quarterly sales. Well, yeah, today we are approaching $20 billion in quarterly sales. It's a different era. It's a very different NVIDIA than a couple of years ago.
There are two massive markets that are lifting NVIDIA. The world's existing data center market, which is valued at around $1 trillion, is refreshed every 4 to 5 years. And so this is in need of upgrades using accelerated computing hardware to meet the demands of new high-end software like AI. The second is the new generative AI market needs purpose-built data centers to enable organizations to build the custom AI using their own data.
These two massive secular growth trends that are really, they're related, but they are in fact different, potentially making the data center market worth perhaps $2 trillion by the end of this decade. We don't know. It's too soon to tell. But if there's a new $2 trillion data center market by let's say 2030, and that massive enterprise infrastructure needs upgraded roughly every 4 to 5 years with refreshed hardware, you begin to get a sense of the reason why NVIDIA stock has gone on such a massive run. And just to illustrate further what you were talking about, Kasey, in this first chart, the accelerated computing trend that NVIDIA has helped start, you can see Moore's Law there in blue. That's basically Intel's old manufacturing process outlook, where transistor count roughly doubled every couple of years. Well, in the new accelerated compute era, driven by those GPUs that NVIDIA has long specialized in, you can see the exponential increase in computing power just the last few years. But at the end of the day, like any infrastructure based market, NVIDIA is cyclical. You'll have these multi year spurts of growth, and then you'll maybe have a period where the growth cools off, or maybe there's even a temporary cyclical decline before that new refresh cycle kicks in again for those data centers. So let's talk about when are the signals going to crop up to sell NVIDIA?
Yeah, this specific topic and question actually came up over on our Discord live Q&A session we had last week regarding big tech capital expenditures flatlining or declining, why this is an indication that it might be time to sell or trim your Nvidia position.
Indicator number one that it might be time to start selling NVIDIA stock is capital expenditures, CapEx, spending on property and equipment among NVIDIA's biggest customers, big tech, notably Alphabet and Meta, two of the world's most data center rich organizations. You can see that their CapEx actually dipped in 2023. That's because all companies were paring back spending during the bear market. Interestingly, though, they actually pared back spending on traditional data center infrastructure and funneled a lot of that cash to NVIDIA. So this is not by any means a perfect indicator, but you can see the uptick in their expected spending in 2024. And then Oracle, which we just recently covered in a video on their Oracle cloud infrastructure, again, a dip in the last trailing 12 months, but their spending is also ramping up again. And all these companies indicated that their CapEx on data centers and the computing systems crammed into them probably going to be elevated for the next couple of years.
Let's move on to point number 2, NVIDIA's revenue and guidance flatlining. Look for sequential quarter over quarter revenue and forward guidance to start coming in flat, 0% growth from the prior quarter. This can really be a telltale sign for any cyclical business. And this signal was actually a really good indicator back in 2021 for NVIDIA. For reference, we actually called that in December of 2021, the last cyclical peak for NVIDIA when we were preaching caution at that time. But on the flip side, cyclical declines are coming to an end when revenue declines also start to flatline on a sequential basis.
Yeah. And you can see that again, NVIDIA's quarterly revenue trend, both overall revenue, you can see the last cyclical decline, which was at the end of calendar year 2021 or fiscal year 2022 for NVIDIA. And that decline lasting through most of 2022 before flatlining at the end of the year, and now off to the races ever since. Just in the last quarter, nearly $4 billion quarter over quarter increase in data center revenue from Q3 to Q4 fiscal year 2024. And NVIDIA expecting that number to continue to increase on a sequential basis throughout this coming year. It looks like NVIDIA is still very much in the midst of a growth cycle.
Number 3, valuation looks absurdly high. Tell me about using a price to sales ratio, Nick, when you're trying to calculate NVIDIA's valuation. Is that something that we should be using?
Absolutely not. This is a really odd one to us because in 2020 and 2021, during peak cloud software mania, investors were using price to sales ratios to justify continuing to buy those stocks. And then the metric kind of disappeared during the bear market. And now it's making a comeback, except now a lot of investors are using price to sales ratios to justify why not to buy a stock. Super confusing if you don't know what all of these different metrics mean. But to be perfectly blunt, if you're using a price to sales ratio to try and make an absolute call on NVIDIA's valuation, yeah, God help you, I guess. Price to sales ratio are for general comparisons from company to company. And as we've been talking about for going on 2 years now, NVIDIA has no true competitor, at least an apples to apples comparison in this new accelerated computing driven infrastructure upcycle. Nvidia is a unique asset. They have a unique stack of chip design systems and software. Don't use price to sales ratio. Don't get suckered into using that as an absolute indicator. So, what is a good absolute indicator? Let's maybe talk about forward looking price to earnings on a gap basis. So, again, Kasey, you already mentioned that public call in December 2021 when it's preaching caution on Nvidia stock. A link to that in the description below. But at that particular time, Nvidia was trading for 80 to 90 times expected earnings per share at the peak of the cycle before the bear market took over. As of right now, Nvidia stock trades for about 38 times current year expected earnings and 32 times expected earnings for next year, fiscal year 2026, which ends in January 2026, a year and a half to 2 years from now. That is not a cheap valuation, but it's not an absurdly high one either. There's a lot of things that will affect that valuation. It's highly subjective based on the inputs that you plug in there to try to figure out NVIDIA's absolute valuation. But at this particular point, I don't think we can call this stock absurdly expensive based on what the company itself is expecting in the way of financials for this current year.
That leads us to our ultimate question then. Who should be selling their NVIDIA stock and how should they go about doing it? First, let's go over who should be selling their NVIDIA stock. The first one, you are overweight with NVIDIA stock in your portfolio by a large amount. This could be any allocation that you have just to the NVIDIA stock or in an ETF. So you need to keep track of both of those things. If you're overweight in NVIDIA stock, it may be time to take a look at trimming your position. The second one, you're retired or very close to retiring. It's maybe time to take your winnings and keep them stashed away, especially if you're living off that money right now. NVIDIA stock can't continue rising forever, so it may be time to be prudent and cautious with your portfolio. The third reason, you don't have a clue what's actually going on. You heard someone talk about NVIDIA stock at work, or you read a news piece on NVIDIA and you purchased this stock. It's not a good reason to own and hold a company based on that. You really do need to understand what's going on behind the business.
And on point three, you can rectify that situation, right? Welcome to the Chip Stock Investor channel, where we have a ton of content over the last couple of years on NVIDIA and the semiconductor market overall. Okay. So, how about the how? If you determine, you know what, I'm just not comfortable owning as much NVIDIA stock as I have, let's talk about dollar cost averaging. Now, Kasey, we very frequently preach to investors, especially in that third category, that maybe aren't fully understanding yet what NVIDIA does and how it makes money, or any company for that matter. If you don't quite fully understand how the business operates and how they make money, we often preach a dollar cost average plan. That's what we do, especially when it's a new business that we're still learning about. We take a cautious approach and we'll buy in batches, perhaps on a monthly or quarterly basis. Dollar cost averaging is when you take a fixed dollar amount and buy the same dollar amount of a stock periodically, again, every month or every quarter. Now, if you're looking to lower your position in a stock like NVIDIA, you can do the reverse of that. It looks exactly the same, except you're hitting the sell button instead of the buy button. Maybe you take a certain fixed dollar amount monthly or quarterly, semi annually, once a year, whatever, and you sell a bit of your holding. Again, fixed dollar amount. Instead of buying it, you sell it until you get down to the desired portfolio allocation amount that you're looking for. This is a fantastic way of approaching portfolio allocation, because portfolio sizing is a really important and often overlooked part of managing your own investments. So really think hard about that, about not just the upside, because right now the times are good. Everybody's feeling great if you have NVIDIA in your portfolio, but you need to think about what you're willing to put at risk and how that's going to affect your emotions when there's an inevitable cyclical decline in the stock. So a reverse DCA could be a way you help mitigate that future risk.
That's a wrap on today's video on when should I sell my Nvidia stock. We have our video notes available for purchase over on our Ko-fi shop, or you have access to our video notes and manuals on Discord via a membership here on YouTube or over on Ko-fi. Make sure you hit the subscribe button if you have not already, and we will see you again very soon at Chipstock Investor.